Interactive Brokers chief strategist Steve Sosnick and Circle Squared Alternative CEO Jeff Sica to make sense of it all. Steve, I'll begin with you. Once again, we see this leadership from technology, but mostly Nvidia. Is it worrisome, or do you just give in to the tape that you have a very small group of names leading this rally?
Well, good afternoon, Liz. I think it's a little bit of both, actually. I mean, to me, it's Nvidia's market, and we're just all trading in it. But, you know, in some sense, this reliance on Nvidia is a little scary because it's great when it goes up 7%. If and when it does ever start to correct, and that may not be until even after it splits on June 10th, but let's just say if this ever turns around, I shudder to think what's going on, because I think it's sucking in a lot of money from other places, as you saw from the heat map. That money, I think, is flowing out of those stocks into Nvidia, chasing the momentum. That's great until or unless this comes to a halt.
Well, it just looks like investors, Jeff, are primed to get into stocks at a very time where we've seen that happening month after month after month, except for April. Mm-hmm. What do you think?
Well, I mean, yeah, and I think just like Steve said, the fact that Nvidia has captivated investors. If you even look at the utility stocks that supply energy to data centers, they're the leading performer in the S&P 500. Think about that, Liz. The leading performer in the S&P 500 outside of Nvidia are utility stocks. When everybody when I talk about utility stocks, I could put a whole room to sleep with that conversation. Now all of a sudden you're looking at stocks like Constellation Energy, stocks that are approaching these astronomical valuations because they're just playing AI. And this is another way to play AI. And like Steve said, there needs to be a broader interest for investors to feel confident.
Well, Steve, you like utilities here, partly because of that, but any other reason? I mean, the dividends sure look good, but specifically Constellation Energy Group, that's starting to look heavy top heavy rather.
This is, to Jeff's point, I mean, this is the thing. I kind of like the idea of dividend-paying stocks. Even though they're a bit interest rate sensitive from time to time, I like getting paid. There's nothing wrong with that. But this run they're on is crazy, and it's also fed into the price of copper, which has gone nuts.
Yeah.
And, you know, it takes a long time to translate from wanting to build electric power to actually building it. So I think the market may be ahead of itself there. That's where we get into these issues. And there's nothing wrong with taking the dividends and taking the boring money, as Jeff says, in utilities. But I think when it gets a little too exciting, that's when I worry.
Okay, maybe we can stretch out this Constellation Energy Group chart well beyond just 1 month, Jeff. But that said, as we look at it sort of superimposed over Nvidia and the demand, you want to talk demand. Elon Musk announced, or at least, yeah, he basically said that XAI, the version that he is going to bring up, which he expects will probably take on ChatGPT, will be powered by Nvidia chips, tens of thousands of them. So there's your runway for earnings for Nvidia in the future, right?
It is, and the fact that you have Alphabet, you have Microsoft, you have Amazon spending tens of billions of dollars on these chips. I got into this stock in 2018. The year I bought it, the stock fell 35%.
Which one?
Into Nvidia.
Nvidia,
and
okay.
The stock fell 35% because then they said they only make chips for video games. Now they make chips for everything. And what I think is the advantage to Nvidia is Jensen Huang. He is a brilliant CEO. He took this from the ground up and made it what it is. I think he communicates his message right. And I think it's got a ways to go. But when you're looking at that, right now, Nvidia has a chance to overtake Apple.
Okay.
I mean, let that sink in.
Okay, let that sink in. But also let's sink in that investors seem, as we say, very primed to drink from the stock market fire hose, Steve.
Yes.
Are they too complacent? Are they too bullish? You believe they are.
I think they are. Yes, I do think there's a lot of signs that are starting to show this. We see, first of all, VIX, we see, is rock bottom, below the teens, sort of 11, 12. That's telling us there's not a lot of demand for institutional hedging, which means that institutions are quite sanguine. There's also a lot for sale from ETFs all the time. We saw in the city, Citibank has the Levkovich index. That's hit
Tobias.
euphoria after the late Tobias. That is showing euphoria, which is it's only done about 6 times before, and none of them have ended really particularly well. In the Bank America survey, portfolio managers are holding about the least amount of cash that they have in 3 years, which sort of goes against the cash on the sidelines idea, which is fine, I guess, if retail puts cash in, but if institutions are tapped out, that's not a lot of money coming in.
Jeff, let's say you're nervous. Let's say people are a little concerned that we are maybe heading toward at least some type of correction, which would be natural. Same with a recession, totally natural. In fact, we are arguably overdue. Treasury yields are actually moving higher right now. We've got the 2-year blasting to 5% at the moment, and you know, consumer confidence came out today, and consumer confidence shows much better than expected numbers. So do you have allocation of a little corner, or are you a stock guy all the way?
No, I'm a stock guy all the way. I don't like the bond market now concerns me. I've been buying the utilities, like Steve said. I've been buying the utilities for income. I would say, and just to go along the topic of complacency, I mean, this market has been so geared towards AI, number one, and the Fed lowering interest rates. There is a bet that the Fed, even though we're seeing these numbers that don't necessarily support an interest rate cut, there's a lot of investors who are banking on an interest rate cut, and I think they're going to be very let down. What concerns me is consumers are still spending, but they're spending off of their credit cards. And credit card debt right now is higher than it's ever been in history. I think there's going to become a point where the economy and the stock market converge, because right now the economy is doing lousy, the stock market's doing great, and I think there's going to come a day of reckoning where the market is going to realize that the consumer is 70% of this economy, and the consumer needs to recover.
Although I would just say durable goods numbers, which are big ticket items, those sales came in very strong last week. So, you know, the data in many cases do show the economy is not lousy. But I want to thank you both very much. We are looking at a 291-point loss on the Dow Jones Industrial, Steve. And, of course, Mr. Sica, Mr. Jeff Sica. Great to have you both.